Now let's break down our next story of the day, which is the $1 billion Bitcoin price prediction for one of the top asset managers in the world, which is Fidelity, which currently controls over $4.5 trillion in assets under management. They recently just shared a report. So I first and foremost want to share with you the highlights of the report. As you can see here, shared on X by Documenting Bitcoin, Fidelity manages $4.5 trillion with 43 million investors trusting Fidelity. That's a lot of investors, fam. Now, yesterday they published new research explaining why investors should consider Bitcoin. Here are the 10 key takeaways. Okay, so as they share here, Fidelity finds Bitcoin is the best money. Quoting them from the report, Bitcoin clearly possesses a lot of good qualities of money, combining the scarcity and durability of gold with the ease of use, storage, and transportability of fiat. Preach. So much more superior, and it shows you the comparisons here: gold to Bitcoin to fiat currency, durability, divisibility, fungible, portable, verifiable, scarce, and the track record, which speaks volumes. Next up, they list Fidelity explains virtuous cycle of Bitcoin, quoting them here. This Bitcoin network competition is likely to result in a winner-take-all scenario as the network grows and becomes more valuable. You know what winner-takes-all means, right? It all goes to zero against Bitcoin. And here's the circle they show, the virtuous circle of reflexivity of Bitcoin. More users and hodlers equals higher demand equals higher prices, more miners, higher security, more attractive, and more users and more hodlers. And the cycle continues. And they also share Fidelity compares Bitcoin to the wheel, quoting them here. The invention of the wheel represented an entirely new technology that once invented can never be reinvented. Similarly, never in human history had the problem of peer-to-peer electronic cash been solved until Bitcoin. Preach, as highlighted here in the report. I mean, very powerful. Next, they share Fidelity is amazed that Bitcoin survived. How many of you are amazed that Bitcoin is not dead after all the mainstream reports over the years that Bitcoin has officially died over 1,000 times? Quoting them here, every minute, hour, day, and year the Bitcoin survives increases its chances of continuing into the future. People would probably underestimate all the negative events that Bitcoin has already endured. Great point. Now let's break down their next point they share. Fidelity provides hard numerical data showing how secure Bitcoin is compared to other coins, quoting them here. In terms of sheer computational power required to alter the network's consensus, Bitcoin far exceeds any remaining proof of work competitors. Facts. And as you can see, the 30-day mean hash rate continuing to hit all-time highs. There is no comparison whatsoever, meaning it is the most secure network in the world, and that's what makes the technology so fantastic. You know what I mean? And if you try to attack it, as I shared in an audio from Andreas Antonopoulos, the more powerful the network becomes. So you can't attack it. It's only going to make Bitcoin that much more stronger. Nation states already know this. Next, Fidelity compares Bitcoin to the internet, quoting the report again. The Internet Protocol Suite, known as TCP/IP, is an open source based layer, applications on which to be built. Now, owning Bitcoin would be akin to being able to own a base layer of the internet. Now, how many of you would love to own the base layer of the internet? Start stacking those sats, fam. Very powerful comparison. I love that metaphor personally. Next up, Fidelity points out, Bitcoin continues to dominate the market capitalization of all competing currency tokens. That, my friend, is a fact. It's the king for a reason, and it's staging a 51% attack on the altcoins, if you're to ask me. Now, next, they share, Fidelity agrees that Bitcoin is useful, quoting them again. It appears at this point that Bitcoin has found the role in the digital asset ecosystem as a scarce store value asset at the very least. Preach. And there's the final 10th and final breakdown coming from Fidelity on Bitcoin. They conclude Bitcoin should be considered first and separate from all other digital assets that have followed it. Very well said, fam. So if you want to see this entire report, be sure to check the show notes below the video in the description. Now for Fidelity's $1 billion Bitcoin price prediction by the year 2038. That's right. This was initially shared by Jurrien Timmer, and I want to break this down. And if you don't know Jurrien Timmer, he is the director of global macro at Fidelity. He put forth the notion first that Bitcoin has the potential to reach a value of $1 billion per coin in roughly 2 decades. Send it, let's go. Specifically around the year 2038. And to support his forecast, Timmer employed a combination of models and charts with a particular focus on the stock-to-flow model and his own demand model. These analytical tools formed the foundation of his primary prediction. And as you can see here, it shows you the Bitcoin supply and demand models, showing the annual and monthly data, sources coming from Bloomberg, as well as Plan B, creator of the Bitcoin stock to flow model. Now, this above demand model employs Metcalfe's law, and according to the number of its users growing linearly, a network's value grows geometrically. This means that the utility and adoption of Bitcoin are expected to grow more rapidly compared to its network of users, exchanges, ATMs, and participating retailers. Therefore, this model predicted the Bitcoin price will reach $1 million by 2030. And I want to stop right there because we all know this prediction. We've heard it before. Plan B has been anticipating a $1 million Bitcoin price as per the stock to flow. And he says Bitcoin is likely to be somewhere between $100,000 and $1 million post Bitcoin halving 2024. Obviously, that's a very wide gap, but interestingly, that's right in alignment with Jurrien Timmer, head of global macro at Fidelity. But here, my friend, is where things get very interesting with his price prediction model. So let's break this baby down, shall we? Here we go. So yeah, this is the chart right there. Now, in contrast, Timmer's stock-to-flow supply model notes the event of significant price surges during each halving event, which we all know. Consequently, when considering this model in conjunction with the other factors, it foresees the price of Bitcoin ranging from 1 million to 10 million for Bitcoin by the year 2030. So a factor of 10x more than Plan B's stock-to-flow model. Now, Timmer's demand model is more inclined towards reflecting the bottom of the Bitcoin price. And on the other hand, the stock-to-flow model seems to provide a better approximation for the peak of the King coin. However, it's worth noting that the disparity between these two models widens significantly beyond the year 2030. Again, here's where it gets interesting. The reason behind this gap is expected to be changing the value of the dollar. That's why it's so astronomical. Timmer proposes that the value of the dollar undergoes fluctuations over time when compared to other assets. For instance, if $1 was invested in stocks during the 18th century, its present-day value would be about $4 billion. Now, similarly, Timmer implied that if 1 million is invested today, it can grow to $1 billion in a span of 20 years due to inflation, fam. The melting ice cube, as Michael Saylor described money sitting in the bank as. Now, this further revealed that the purchasing power of the dollar had significantly reduced due to factors like inflation and depreciation. Thus, Timmer's statement implied that keeping a fixed amount of dollars for many years may lead to reduced purchasing power due to the assets changing value. And over the last few years, an increasing number of companies are taking over the 1 trillion market cap. And as a result, it's foreseeable that in the next 20 years, the concept of a $1 trillion valuation will become more common, so much so that individuals themselves could be worth $1 trillion or more. This scale of numbers may even reach the quadrillion range. Who do you think is likely to become the first trillionaire in the world? If I was a betting man, I'd throw it on CZ. He's currently the richest man in crypto. Maybe Michael Saylor, the CEO or founder of MicroStrategy, which currently controls over 157,000 BTC. We also have Barry Silbert, the owner of Genesis, which is the parent company of the Grayscale Bitcoin Trust, which currently controls over 600,000 BTC. These are all great candidates, but I do believe that the wealth of Elon Musk and the elite dollar gods of the realm, the Warren Buffetts, the Charlie Mungers, they're all going to be overtaken, I believe, by those in crypto, especially as the Bitcoin price continues on the rise. But what are your thoughts? Who do you feel will become the first trillionaire in the world? Let me know your thoughts in the comments right down below. So, is this milestone still achievable for Bitcoin? Well, despite Bitcoin's historical growth, it had recently faced a significant setback. Bitcoin's network activity had diminished, but hey, we're actually back reaching all-time highs as far as the hash rate is concerned, and the network difficulty adjustment continues to do what it does best, and ultimately there's no stopping it. So although Timmer's prediction may be considered far-fetched and lack empirical evidence, it doesn't completely dismiss the possibility of Bitcoin reaching such levels as $1 billion per coin. The concept of de-dollarization has gained stature, shifting global attention towards alternative currencies. This shift in focus is expected to drive the demand for assets like gold and crypto crypto and Bitcoin. And with BRICS pushing for the fall of the dollar, the BRICS currency and Bitcoin are expected to continue to garner momentum. You're damn right. So how high do you think the Bitcoin price is likely to climb by the year 2038? Do you think that $1 billion per coin can be a potential reality? Let me know your honest thoughts in the comments right down below.